investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. First day of December, Thursday, and we're looking at the Dow down 194, giving back just a little bit. Yesterday was up over 700 points. Here we are down 200 at 34,000, actually 392 at this particular stage. Couple of things. Let's just do this one step at a time. You see this little blue line right here? That's the on balance volume. It's just the running total when it's the bar closes up, you add the volume. If it closes down, you subtract, and it's a running total from whenever you started. In this particular case, it's in one of the few technical indicators I use as an overbought or oversold indicator, and this is saying very overbought. It doesn't mean to say it has to pull back sharply. It just says right here you might stall a little bit. So be a little careful. The stochastic has gone from the I think it was at the 89% level a few days ago. Now it's at 81, so it's pulling back. The MACD is turned down, but it's flat. Flat's good. The 9-period moving average is still above the 14. That's good. So just to briefly review what I've been talking about since Monday is that for subscribers to my opening call, on Monday, we bought the 3 times long S&P. One of the reasons is I did not want to touch. I didn't want to interfere with our very long positions in the Dow Diamonds and the 3 times long UDOW. It just seemed to me there was no way that I felt I could. It's great when you get it just off the low or just off the high and you're short because you have room for those wiggles and jiggles. But what would we have done yesterday if we had gotten out of one of our positions, or maybe both, the diamonds and the DOW, and it screamed to the upside? Now what do? Do I want to go long now at peak D or leg D? We don't know if it will be a peak D. That's where you've got to raise your foot off the accelerator, just wait for a moment to see whether it's going to recycle up. That's real tough. So what I did is we raised the stop and we had a position. We took a position off with a really nice gain in the SPXS, and then raised the stop so that no matter what happened, we had a profit. So we got out of that, and fortunately, what we're looking at is within the context of still holding. I don't mind if the market pulls back. In fact, that'll be great. I'm looking forward to a pullback. There are so many stocks that look really interesting. But that doesn't mean to say that I want to mess around with this position. In fact, I'd like to add to the position at some point. But right now, it's just that moment of truth where it says, news-related, big spike up, a lot of short covering. Actually, it looked to be like in some sectors that was a lot of new buying. We actually went into a sector we've not touched for ages. We've had a stock in that sector at some point, but not for a lot. I'm talking about 2 years maybe. But we did go long today, and even though it's had a real nice move off in the daily chart, the weekly chart still looks terrible, and the monthly chart looks terrible. But it's a sector that my thinking has been for a long time. We've followed it because if you go into the dividend sector, what you want is you want like the oil, the multinationals. We had an oil sector stock with a nice dividend, got out of it with a little bit of profit, and then it just soared. But at this point, do you really want to go into an ExxonMobil? Yes, there could be some upside, but it also says it could go sideways, and it could even at 111. Yes, you get a great dividend. So let's just say the dividend is, I'm not sure what it is, 4.8% or maybe 5%. So you got a 5% risk here. So that means at 111, you've got to say $6 risk. And if it goes below that, if it goes quickly from 111 right now over the next 2 or 3 or 4 weeks, and it starts to go to 104, now you've lost capital gain and you have to hang around for the dividend. So my contention here is that this particular sector is traditionally great for dividend and capital gain if you get it right. If you get it wrong, then you lose it. But my thinking in this other sector is that it's a sector that for a long time has been vulnerable. There's a lot of competition. There are a lot of people that are kind of backing away from this sector. But right now is exactly the point where economically and market-wise and everything else says that this is probably at least a chance to get in. So we started a split position, one here and one quite a bit lower down. If we get it, I might only stick with one position. I don't know. But at least we're in it, and it's running nicely today. From the moment we got in, it's up just a little bit, but at least it's holding while the market's starting to pull back. The day's young. It could still pull back. That's fine. We're prepared for that. But I'm saying selectivity here, even within a sector, is absolutely imperative. So, we've been talking about, for how long have I been talking about it, saying we don't own this, but I don't know why we don't own it. I spoke about it enough. IBM, International Business Machines, information, technology, AI, cloud, and enterprise software. Look at this. Absolutely spectacular. A multi-year high, just in the 150 area, it's trading at 148.52, down 41 cents. And yet, the leader in the cloud, CRM, Salesforce, and I've been talking about this, I don't know how long, it's getting a little boring now. It made a high in November, over a year ago, at 311.25. And I've been saying, Benioff, the CEO and co-founder, I think he lost his vision in the sense that the focus for the company, while he's busy writing books and doing all sorts of other things, admirable, wonderful, but I think it's been to the detriment of this particular stock. So here it is, the leader, Salesforce.com, goes from 311, it's trading at 142 right now. I would definitely call that cut in a little bit more than half. But at the same time, you've got, so I'm saying sector by sector, I'm trying to go through the stocks and say, hey, let's see if we can find the sectors that are, I wouldn't say immune to any pullback, but to have their own independent strength. Good, we're done with that. So now let's go back to the story, and we want to look at, I can't remember now. Let me just do this real quickly. INDU, the Dow is down 265 at 34,222. The S&P is now negative, I believe, down 13 at 4,066. Leg D, at D, you got to be a little careful. Not only that, you're just barely above the 4,024 200-period exponential moving average for the first time. It's trying to tackle that in the last 3 weeks. This is the third time and this time it's broken above. But let's see. Most importantly, look at this. Chapman Wave Inside Track Repellent Zone. It's stalled right on the green line. So this is the week. By Friday, tomorrow's Friday. By let's say even next week, is it able to get to the 4150 area? That'll be really good, or 4120. That'll say, hey, I've broken out from that resistance level. QQQ couldn't take it out until yesterday, and then it popped above it, and that's a good sign, but it's still a very weak chart. I'll be back. Dow's down 263, S&P's down 12. Basil, Chapman, Tiger Technicians Hour.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hello, just wanted to show you this. So the E-mini 10-minute chart, it made a peak D in the 1-minute chart. And so it's pulled back sharply under the 200 period. Look how spectacular the 200 period moving average has been for bounces. And now all of a sudden, it's not just a repellent zone. We've gone sharply below it, down 18. Most importantly, so I want you to show you something here. If I was to do a left side, right side price time match, because the 4,047 level is the 200 period moving average, which would be my target for the day. You can't go left side, right side price time match to that peak E top that was made at, 50. So that's 50 minutes past midnight last night, just before 1 o'clock. So this little conglomeration of little cluster formation right here at 250. It was 250 yesterday afternoon. That says that the low of 4,028. If I was doing a measured move, I'd do it to there. Well, now I'm already 1 bar late. So that means that one wouldn't work. So I'm looking at this and I'm saying, well, where would the next one be? Because that's really low down. And this is a 10-minute chart. So I would take, usually I go for a particular candle. You can't really see the candles right now because the moves are so big. So I'd have to go here. And that takes you out, really takes you out to... now I'm going to have to move this. So let's just do that. Move it bar to the bar, space to the right. There we go. Make the space. I usually don't do this. Wow. Let's just go 30 bars. Okay, there we are. And now I'm going to go from this. I'm just going to click, double it, and say new parallel. And that takes me out. Oh, it's even 30 is too much. But it says somewhere very late afternoon, if the 200 period moving average of 4,047 doesn't hold, then this low right here at 4,028 would become a target. In the meantime, there should be some kind of a rally, and I'd probably see the dreaded H pattern, but 4,047. and we're at 4,063, would be the very important 200-period moving average to hold. So let me show you something else. This is the GC. This is the gold contract. Just made in the 10-minute chart a peak F. Spectacular move, up 52 points at 1811. So we'll be watching this, and 1800 would be, if there is any pullback at all, 1806 to 1800 would be a target, and that would be sometime, if I do that, I don't want to take time right now, sometime just about before 1 or maybe a little after 1, and only if if 2 out of the 3 candles in the 10-minute chart of gold trade underneath 1807, then you can expect a test of the 1805 to 1800 level. Meantime, I have nothing here that's technically negative, but I see the start of a turn down, and we'll watch that. And other things, someone asked me about natural gas. Natural gas just made a peak F in the 10-minute chart. It's pulling back. A very nice pattern, beautiful cup pattern. Look at this left side, right side price time match to the midpoint there. It hit it to the bar before it broke to the upside. I also have some fib numbers in there. But most importantly, what we are looking at this stage is a give back, some give back in different percentages in some of the indices after that spectacular move yesterday, especially from the last hour, and you're giving some of that back. And now, even more importantly, is the VIX index. If you look at the VIX index, trading at the 20.80 level, and it's trying to make a cup formation test of the left side low. It's gone below it now. That was 2032 on the 23rd of November. Today's low is 2025, so we've gone below it, but right now we're above it. It looks to me from the way the MACD is starting to strengthen, the way the stochastic at 17% is starting to move up. It's higher than it was 5-6 sessions ago. It's saying to me that there's a chance that the volatility index could by, today's Thursday, maybe by Friday. And I must say, I cannot shut out the idea that there could be some kind of a rail strike, some kind of a transportation, some kind of a strike coming up that at least worries the market. And believe me, if there is anything like that, we don't need that at this particular point. So within that context, what we are looking at is the chance that the market starts to stall for other reasons. We've still got an economic number tomorrow. I think it's the jobs, whatever it is tomorrow. That could at least distill some of the fear that maybe it's a bad number and it'll hurt the market. But there are other things, and we just don't know what the numbers are going to be. So in the meantime, I'm just saying, what's the VIX index? It hasn't shown any propensity yet. It should actually be much lower down with the market having that kind of a move yesterday. It's not. It's up 31 cents at 20.89. I'm watching this closely. And that's the reason why I'm saying I did not want to use yesterday's move today for subscribers to get into a whole bunch of new things. I had a whole list in my mind, but no, that was just, it was fantastic that it turned like that. It was a good sign because it raises the base of support in some cases, but at the same time, there was a lot of suspicion as far as I'm concerned. And today, the SMHs, which was spectacular yesterday and had been moving quite nicely actually, made a slightly higher high at 229.85 than the high before. That was back around the 14th. Let me see what date it was, the 15th. 15th, it was 229.28. So it's about almost 60 cents higher. And now it's pulling back down 3. I'm watching this because that 200-period moving average, I never ignore it. I consider it to be it's like a magnet line. It goes back 200 bars, and that means you've got time. And if it kicks in as an important indicator, I treat it as look at this. The SMH is the Semiconductor Market Vectors ETF, had this whole dance right on the 200-period moving average way back in August. It comes down and then retested at 247.06 on the 15th of August, peak D, and then kaboom, it falls from 247 down to 166. That was mid-August. and now it's at mid-October, I'm sorry. And then it has a spectacular move, and it runs. And what does it do? Again, it stalls at this 200-period moving average. Just an indicator. I had also this left side, right side price tie match. I call it bar symmetry. It's better to have any technique, a one-word or a two-word heading. And in this particular case, look at that, the midpoint from that peak A minus right there. We failed to get there both in time and price, but what a nice move it was, going to that peak F, and now we've stalled. Is this a G or is it a brand new G/B? I'm sorry, G/C. I don't have to make up my mind right now. I'm just saying that 200-period moving average is a real magnet. And right now, that is trading at 223.11, and the price is at 225.15. I'll be right back. Dow's down 367.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Interesting. So yesterday, GT had XPEV as a call. Today, XPEV is a short, is a put. Oh, very good. And it's down $1 at $90.73. And what did we say this is? XPNG Inc. I don't know what they do. Chinese company, but yesterday. And what did you do with NEO? Because NEO had a spectacular move. It's probably pulling back. Yes, down 77 cents today at 12.01. Yeah. Now let's get back to a couple of questions that we had. Let me find if I can see them. Let me just move over here. I wasn't meant to do this during the break, but I was doing some other things. Yes. So that is a huge move down in the dollar. So in relationship the dollar's moved down, this is where you do get to see today the inverse. So the dollar is down $1.34 at 104.70, breaking under the 200 period moving average, and gold is moving up 49 now. This is just a leg C in the daily chart, still very, very positive. And within that context, let's just put that C in, and it's a leg B in the weekly. The weekly is slowly improving. It was looking terrible just recently, and over the last 4 weeks, it's just really a good move to the upside. We're looking at silver, and silver's fascinating because I looked at some silver stocks both earlier yesterday and today, and I'm surprised that, there we go, silver's acting very nicely. This to me looks like, I'm calling it an F/B, meaning just to continue the rotation, the Chapman wave is one thing, but to give it its due, because the 9 period is still very strongly above the 14. It's pushed sharply away from the 200 period moving average of 21.29. It's up 88 cents today, 22.67. That's really big. And it's a leg D in the weekly. So I feel strongly that I need to show that there is an alternate count, but we can just continue this as F. We could even go to G, and then it will automatically go to C. But in the meantime, good action. The MACD just turned positive, and that's what I was saying yesterday. It hadn't yet done that. And this is a Chapman wave inverted Roman candle, and we've gone way above the halfway mark of the long wick on the upside. So far, that's a very important indicator. But the stochastic, I was a little worried about. It's only at 45%. On-balance volume is getting a tad overboard. So a lot of mixed signals in silver, but this is absolutely a fantastic move from the 18s to 20, just about 23. I would say a 5-point move like that, an $18 stock, we're talking about a fabulous percentage gain. But wait a minute. Within that context, if you look at SLV, I haven't updated that yet, it's a little clearer because that was a peak G. Oh, I don't want to make this into Friday's my technical day. We'll do a little bit more of this tomorrow. But in the meantime, there is a chance that that instant restart has this as a G/C, and this is going to a D right now. So I'm going to give it an alternate count, D/B. Remember, the alternate count doesn't mean say, oh, wait a minute, it can either go down or it can go up. No, it says everything technically is good. In the Chapman wave notation, I have to show you that this instant restart at a peak D within 3 bars is really important to monitor, because it says you can have a brand new buy signal that goes to a buy mode to a peak D, yet another D on the upside. It's a fantastic indicator. So far, it's working very nicely. And it says still very, very strong, but right in the very short term, we might be getting a tad toppy, and we'll have to see how that works. In the meantime, that's iShares Silver. There again is a leg D in the weekly chart. So that's very good. And then high-grade copper, that was something else. Had a really good move yesterday. It's following through. It's about to bump into the 3.82 200-period exponential moving average of the continuous contract. So, okay, enough with that. I wanted to also just show you the TLT. The TLT is it's about to test the left side high of was that 104.05? I just can't remember offhand, or did it just fail to get to 100? It was 103.81. That's right, 103.81. Above that starts a new leg up, but the MACD is good. Stochastic still good at 87%. On-balance volume is daily is fading to really match the strength. It is moving high, but it's not doing it in with great significance. And the little blue line, little gray blue line there, that is the relative strength. And that's just saying, hey, holding very nicely. And that just suggests that the TNX, there we go, TNX, the yields have broken down to the downside. Oh, I never did that. I'll do that right now. So peak D in the weekly chart. So it's a sharp move down from there. And now I want to draw in a left side, right side price time match to see what we can get. So these are the candles I'm going from right here. Usually I will go to the base if the high looks like there's no way to make that in the same time. and I can't even do that here because if I did it, we'd get to there. We're already past that. So I have to go to particular candles that I choose. It's not an artistic endeavor. There are particular candles that I need to use, and I'll do that right here, there, and now we're going to go to the right side for a bar symmetry, if there is any chance at all. And that will take us to tomorrow to hit 35.68 was the low on the 3rd of October in the TNX, the 10-year Treasury note yield. And what we're looking at is today's low is 35.69. So 35.69, the target is 35.68. So we're within a penny of hitting that. And this is the green because it's on the way up. And then there's a rule of thumb that we use. I take a particular left side candle and we move it to where it goes right through the target line. And that makes the target resistance line, target support line right there. I'm just doing this live so that we can do that. Right there. And it says by the 2nd of December, we should be testing, and we're within 1 penny. We should be testing the 35.68 level. Okay, that's just using some of the techniques that we like to use in the Chapman Wave methodology. Now, a couple of things. Amazon coming up with the season, end of the year buying, and it looks to me like, and we've been talking about this for some time. Remember, I had the left side, right side price time match with Amazon from the low of 81.30 March of 2020 to the high of 188.65 peak F in July 2021, and it said that using this same technique that I just discussed, except here you got a plumb line that looks to me like absolutely in the middle, and it said that this is the measured move, by December we should be hitting 81.30. So far the low in November has been 85.87. And we'll see what happens. So, okay, and then here's your Chapman Wave inside wedge target support line. Okay, so that's Amazon still acting quite poorly. And within that context, it would take a move into January, I'd say. In January, the last week of January, the first week of February, if after everything's said and done with the end of the year buying and all, everything that goes on with Amazon, if Amazon is able to get to the 112, 117 level, that'll be a really good sign. If it fails to do that, it's like just the phase for Apple, for Amazon is going to take a lot longer. Apple, as we go to the break, is down at 147. We'll talk about it right here. S&P is down 400. Sorry, S&P is down.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, I had a question about a company. I always have trouble reading this. Sabanya Stillwater Inc. I did the notation just in the break. I did everything from the monthly to the daily to the weekly. And the question what was the actual question? Possible to take a look at SBSW, please. Sakuta. Okay, yes. Excuse me. So it looks to me like a Stillwater must be some kind of silver stock. I'm just guessing right now. I haven't had a chance to look because I want you to do the notations. And what we're looking at is it has a pattern that so many of the actual gold and silver stocks have done where it's gone to the 200-period moving average. I just, let me just double check here. What is it? What time? Yep, I got time. Here we go. So, if I hit this, will it give me all these other IBD things that I never look at? Yeah, maybe. Okay, there we go. So now I've got to type it in. Sibanye Stillwater. Oh, there it is. Okay, Stillwater Investors, Stillwater, Montana. Okay, what is it? East Bold previously operated the Stillwater Mining Company, which was acquired by Sibanye. Okay, good. Yeah, so this is, I believe it says mines. I believe it's silver, but whatever it is in the metals in Montana, and that's the pattern. So what I would do is I'd be looking at this and I'd say the weekly chart has started to improve a lot. This is going close to Friday, and the 9-period moving average for this is the second week has gone L, which means long means that the 9 has gone over the 14. I like it very much, but if you look at the move down from the 20s back in April to the low that was made in the 8 area just about 2 months ago, where it's gone on a percentage basis is great. $2 on an $8 stock. I mean, we're talking about 20%. But if you look at the monthly chart, it needs a lot of work. So if you aren't in it now, but you do like it, buying it right here, just under the 200-period moving average, means that even if it pops up, there's a good chance it's going to retest the 1127 area. So I would think of this more as in the area of, in a way, because it's broken out in the left side, right side price time match from the high that was made on the 11th of August at 10.97, trading right now at 11.27. And it's done it in it went to that level in a shorter period of time. It got there on the 14th, it went to 10.98. Then it pulled back to the 10 level, and now it's at 11.27. So it's almost like it's got another surge of strength. I like it, but it's really tough for money management being a low price stock because the percentages will be big. If I said, hey, you can start a position here at 1090, but I'd have a 980 stop. That's a 10% risk. So what I am going to say is I would just start a position right here at 1090, just really a small starter position, and I'd just give it a little time. But if it's able to pull back and then stabilize above 1040, maybe even 1038. If it goes below that, I wouldn't add to it, but I would just have, at this point, a 60 cent, just in your mind. You don't even have to put it in, but about a 60 cent stop. And that means that you got room to go from 1091 now down to about the 1050s, maybe even 1048 area. And that's where I would look to see, are the technicals holding? Look, the stochastic's only at 70%. It should be over 80%. It's not. So it gives it a little room to digest these gains. So I like it in the sense that it's in an area that's worked well. But risk reward, I would just say, I can't say to you, grab it here, because I can see it going to 1175 in a week. I think it's going to stall just a little bit here, and then it should move up. So that's what I'm looking at. So that's symbol SBSW, trading at 10.91, and the name is Sibanye Stillwater. All right. Our next question came in, and that is, is that over here? I'm just having, okay. Platinum metal group metals. Okay, very good. Limited gold moving into EV. Oh, lithium metals. I've got a whole list here of things that I'm looking at that are in the esoterics. That's the so SBSW, that are in the peripherals, because I think these areas are going to really start to come on strong in 2023. All right, very good. So this is in that area, and I'm going to say to you, yes, I do like it. It's not technically, the weekly and monthly charts need a lot of work, but that daily chart is saying there's veracity there. I don't like, you see that sudden gap to the downside, an island reversal. Wow, it stops everybody out at 850 around about November the 1st, a month ago, and then gaps up, and that's it. Goodbye to that. So I don't like stocks that have the tendency to do that. Does this have the tendency to do that, or is it just a one? No, it does it a few times. Gaps down, and that's it, moves to the upside. Loves the gaps down. So, okay, so that's SBSW. It's on the list there. And next question I had was, could I look at, where was it? I saw it a moment ago. Newmont Mining. NEM, Newmont Mining. Newmont Mining is peak A, B. Did it make a fractional high? I don't think so. 46.92 on the 10th. 46.95, it did. So this is in a leg D. You see how many of these stocks are in potential Ds right now? And that just says, it's a spectacular move in gold. Maybe it just has a little bit of a digestive phase right now, but it is telling us that it is really reciprocating and benefiting from the dollar's decline. And that really is important. And the dollar's decline under the 200-period moving average now says that something, it hasn't done that for a while. So Newmont Mining, weekly, monthly don't look very good, but the daily looks good. I think it'll fill this gap at some point. My target would be for the next 3-4 weeks, 52.12 is the 200-period moving average, but it might stall a little bit before it gets there. Next question came in. Could I see? Oh, silver. I think I just did silver. So silver is, this is an alternate count. I like the action here. I like the fact that it's gone this far above the 200-period moving average, and that's a good sign. Another question came in. Could I look at Oracle? ORCL. Have I updated Oracle? Yeah. Oh, very nice action. So Oracle right now is trading. Oops. It's all the R. Oh, let's see if I can get it. There it is. So Oracle's down 12 cents. It made a peak E, and it's almost, these double tops are really intriguing. Look at this. On the 25th, ORCL hits 83.49. Today, the high is 83.50, a penny higher. And now you can see why I'm intrigued by these alternate counts in the Chapman wave, because you don't have to do anything, but it's just warning you, yes, this could be an A, B, C, F, or it could be a C, but there's nothing to do with the doji candle here. I'm watching it closely, but it looks a little overbought, and I suggest that even if it goes a little higher, in the next 2 weeks, there's a chance at 83 that it tests the 79 to 78 area. But it's active. This is the monthly chart of this out of all the real big techs from the former 2000 highs that collapsed and then re-morphed and changed their their whole modus operandi and came on to brand new all-time highs. This made a new all-time high in about 108 in November, I think, of last year, and it dropped to 60. Now it's come back very strongly. This is a good sign. I'll be back. Dow's down 332.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, for this final segment, folks, just a quick wrap-up of everything we're looking at here. So the E-mini pulled back very sharply from that peak D in the 1-minute chart, went to a trough G, and then moved up. And what I did is I drew in a left side, right side price time match. And that says that by about 11:03, there should be a move to the upside, and it needs to close above the 200-period moving average, which is at 40.82. It's trading right now at 40.76. If that's the case, then we should see a test of this high of 4,068. 88.00 that was made at 10:10 this morning in the E-mini. And if you look at the, remember I drew that line, that Chapman wave, this long extended inside wedge target support line. I drew it in when we were over there, just coming down, and look what happened. It hit it exactly, bounced. Where did it bounce to? To the 9 and 14 period exponential moving averages in the 10-minute chart after that peak D. And once again, I'm going to say 4,048 is really important. That area of the 200-period moving average in the 10-minute chart If it takes that out, then be careful because you're going to probably retest the low that was made at 250 yesterday of 4,028. So far, it's considering everything that's happened, not the Dow, but the S&P is holding really well. All right, with that said, let's just wrap it up here because we're going to go to a break. And then I can't remember if Steve, is Steve still out? Let me just have a quick look. Yeah, I'll do the 11 o'clock update. I'm not. I can't. Maybe tomorrow if Steve's out, I'll do the 11 o'clock show. So I'll do the news right now, and then I'll be back tomorrow. Have a great session. Have a good rest of the day. I'll see you tomorrow, and it'll be the Chapman Technical Friday. Looking forward to it. Have a wonderful day. See you tomorrow.